All right, so I will present our strategy, and Pierre then will talk about financial targets and financial performance. To start a little bit about Mycronic, I think I know that many of you know this company better than I do sometimes. But Mycronic, we have our roots from a little bit different places. What is common is that all of them, we have more of 40 years of experience of innovation. So the very common denominator is innovation in our company. We are present everywhere where there is electronics production or production of electronics. We are present, and currently we are in more than 50 countries, present in different ways with our own companies, but also through distributors and agents. We believe in innovation, and we believe in patents also. We have more than 500 patents in the group. I believe it's important to protect our intellectual property and also fight for it if it's needed, which have happened. And today we are more than 2,000 people in 12 different countries. And being present everywhere where there is electronics production means also that I think we recently announced that we are opening up in Mexico, our sales and service company, because we see there is a good potential to capture a growing market in Mexico for production of electronics. So we are soon in 13 countries with a little bit more people. During the years, we have together sold more than 28,000 systems and to more than 5,500 customers. If we look what we want to be, our vision is we want to be the most trusted partner to the creators of tomorrow's electronics. So we want to participate in the future of our customers. And we will do that by being the leading solutions provider. And we put a little bit of frame on the market and say this is for the production of electronics. This is where we belong. And in selected niches. And those niches we want to select where innovation makes a difference. Because our edge is really innovation, and we believe that we can create profitable growth by being present in that kind of niche. And also, what has been very important is to build up a recurring revenue platform. We have almost 30% of the group's revenue is now aftermarket, which is a very solid base. In patent, it's even up to 37%, I think. And this gives us a very, very good platform to build on for the future. Our principle, I call it our guiding principle. This is like a rule book, or the rules we live by. So I can start anywhere in this circle, but if I start in the long-term sustainability mindset, it's not only sustainability when it comes to the environment. This is really a mindset among our people to cooperate and to contribute to a healthy work environment, to a safe work environment, to an inclusive work environment with diversity, and so on. And of course also to invest ideas in sustainable solutions. Leading to dynamic, people-centric culture. We want to take responsibility, be accountable, collaborate, and so on. And then proactive customer-centric approach. And with proactive customer-centric approach, what we really mean is to really understand what is value for our different type of customers and how do we deliver that value to them. And that is different in different segments and with different customers. And then purposeful innovation. This is really understanding our customers' future needs and how can we contribute to their success in a sustainable way. Lena and Christina will talk a lot about sustainability soon, but if you look on environmental impact, the largest part is through our use of our products. So through innovation, we have a great opportunity to improve the whole electronics industry, at least where we participate. And our ambition is to grow in a sustainable and profitable way. And you saw this morning that we announced new financial targets with continued focus on growth. This is a little bit similar to what we have been doing the past years. We want to continue to grow. But in a profitable way. We don't believe in non-profitable growth. I think that is like empty calories. It's work for nothing. So ensure profitability along the way. The way we run our business, and all the divisional presidents will talk much more about the respective divisions, but we have chosen to run our business in 4 different divisions, each of them with a unique strategy, focusing on very precise market segments and applications with a unique portfolio serving these different segments. And this, we believe, is creating the maximal focus in the market. So starting with pattern generators, doing mask writers today for the display and semiconductor industry. Charlotte will talk more about that. The High Flex division is selling assembly products for PCB assembly to the high flex market, which is characterized by low volume, small batches, very high quality, frequent switchovers, where you can find this typically in the medical industry, industrial, aerospace, and defense segments. High volume addresses the high volume market, of course, which you can see mobile phone, consumer electronics, computers. Main application for us is dispensing here, but we are also expanding the portfolio, doing more things in this segment. And last, global technologies, where we sell very unique technology to fast-growing segments. And today we have electrical testing equipment for the PCB market, and we have ultra-high precision die bonding equipment, mainly to the datacom and telecom market, but also aerospace, defense, medical, and automotive is here. What is common is that in each segment we are number 1. So in the pattern generators, we are the number 1 mask writer company in those selected segments where we are chosen to be present. In the High Flex division, we are the number 1 solution provider for the high flex market for PCB assembly. And in high volume, we are also the number 1 solution provider in the dispensing, with the core in dispensing. And in global technologies, in those selected a little bit narrow niches, we are the clear market leader and technology leader in those. But you will hear more about the divisions soon. I will talk a little bit about, you saw all the press release, I guess a few weeks back, that we are contemplating and evaluating the possibility to list our Chinese company Axon on the Shanghai stock market. And this is still an evaluation, no decision on that, but we believe that to list Axon on the Shanghai Stock Exchange, which is the STAR market. The STAR market is the high-tech market. So just to qualify for the STAR market is a quality stamp in itself. Only the best companies are able to qualify for this in China. So this will strengthen our brand, our reputation, both among current employees, future employees, customers, and suppliers, and so on. So we will be a more powerful and well-known company, especially in China, of course. It will also give us the opportunity to compete for talent by designing attractive incentive schemes connected to the IPO. The China talent market is extremely competitive when it comes to the super best talents. And companies that have this kind of incentives plans normally are more successful. We want to be a very attractive employer. So it's both for the current employees and future employees, of course. And create an advantage when we want to grow through acquisitions. It's an advantage for the acquired company to belong to a listed company. It's an advantage we can pay with money we get through the listing, and also, of course, shares that we can give. So we have more tools and more ability when it comes to acquisition. And be a more attractive supplier and corporate citizen, which means that in relations with local governments and so on, also have a better position. And all this together we do really because we believe that there is more potential for Axon in China than we actually explore today. Axon has been extremely successful. We have grown on average 40% every year the last 5 years. But even that, we believe that we can capture an even bigger potential. And this is a way to be able to participate in that journey. All right. Now I will hand over to Pierre to talk about numbers.
Thank you, Anders, and good afternoon, everyone. I will then speak a little bit about the new financial targets, which we have communicated this morning, but I will start by looking at where we are when we set these targets. This is our performance over the last 10 years. You can see that this company has been taken from a 1 billion SEK company to today, where we are approaching the target which was set in 2017 of 5 billion. We have an annual growth rate of about 14%. Of course, a little bit boosted by a weak Swedish krona, but also without that, this reflects a double-digit growth underlying both organic and through the acquisition that has been made over the time period. On the profitability, we have 2013 was the last year where we were below the current financial target, or the previous financial target, I may say now, of being above 15%. So this has been a very profitable company for the last 7-8 years. We have also had a target with regards to our leverage, that we should be less than 3 times our EBITDA in terms of net debt. The company has not been indebted for a while, so this has not really been affecting us so much, but it has been there creating the frame. So this is what we have done in the past. We can also see that we are at present getting more meaningful contributions from all divisions within Mycronic. This company has, if you look to the right graph, you can see that 2019 and 2020, almost all profit in the company came from the pattern generator division. And we would not like to eliminate that, of course, but we also need contribution from other divisions. And this year, about half of the profit is actually coming from the other divisions already. And we want to build on that and ensure that going forward. We have a strong balance sheet today. This may be good as the environment is a little bit unsteady, to say the least. But it also gives us the possibilities to act when we see opportunities. We don't intend to have a strong balance sheet for the sake of only having a strong balance sheet. We also want to take the opportunities that come through that. We have an equity ratio of more than 60%. We have 500 million net cash position, and we have 2 billion of credit facilities that we can draw on should we need to. So good track record, more contributions from all divisions, and a solid financial position. This is what we have as a base when we set our new financial targets. And they are, of course, set in a time when things are a little bit unsteady. But we see this long term, and we have put the time frame also to be long term, 2027 to 2030. So latest 2030, we aim to be a company which is having a turnover of 10 billion, a profitability of 2 billion, and this should happen at the same time as we reduce our carbon footprint by 2. And this is measured in absolute and not relative terms. So net sales, we have conducted a strategy work during the spring this year. All divisions have strong positions, as Anders mentioned earlier. They also see distinct opportunities for growth going forward. So the organic growth will be the foundation for reaching these 10 billion. On the profitability side, yes, we have been doing 20% profit historically, and we are aiming to get back there, even if we will have a year this year slightly below. And we also want to be above this 20% throughout the journey to the 10 billion. And this we want to do, cutting our emissions, our own emissions, by 50%. This is not the largest environmental impact from Mycronic, and we will connect to the science-based targets to also include the use of our products, which is actually the larger portion of our footprint. This is what we need to do our part of the Paris Climate Agreement, and we are very motivated to take this challenge on as well. Christina and Lena will speak more about it, but before doing so, I would just like to mention a little bit on what we are looking at when we are looking at potential add-ons to our business. We look at businesses, place businesses, both industry-wise and target-wise in this matrix. And on one axis, you have the standalone attractiveness of that niche, that business. This is how profitable it is, the competitive landscape in it, technology, how high that one is. Anders mentioned innovation as one criteria. So we have that on one axis, and we have on the other axis how well this fit with us. We call it here value-added logic. How close is it with our current customer? How close is it with our technology? Are we enabling things with our technology or being enabled by adding this technology? For the divisions, which we have now since 2 years, totally responsible for their profit and loss statement, they should look where the value-added logic is high. The company target may not be as attractive, but there should be synergies by bolting this on to this division. When it comes to the group, we have also a small strategy M&A team on group level. There, the focus is to invest in the right companies for Mycronic. And we are supposed to serve the electronics industry going forward, and it needs to have a standalone attractiveness, which is very high in itself. Is it high value-added logic? Yes, this is good, but this is not the only criteria for doing these type of acquisitions. So this is how we will look at it, and as mentioned, we are ready to look at the opportunities even in times which are a little bit unsteady. And with that, I leave the word via Sven.